Welcome back to the Better Lives podcast. I'm your host, Kaitlin.
And I'm Michelle.
And today we're breaking down a topic that impacts almost everybody. Whether you're buying your first home, refinancing, or just trying to make sense of the financial headlines, interest rates. You've probably heard of headlines about interest rates dropping or maybe going up again. But what does that mean for you as a home buyer? We have a special guest today to help us understand. Alex Singletary, Mortgage Loan Originator at Central Willamette Credit Union. Thanks for being here today, Alex.
Hey, thanks for the invite. I'm honored to be here. It's been about 6 years since I did a podcast last, and the last subject was around sports betting, so a little bit different today. Thank you.
Yeah, no problem. Thank you for being here. So let's just jump in and start with the basics. Like, what is an interest rate and how does it work for somebody who's interested in buying a home?
Yeah, great question. So to break it down, I went ahead and put some prompts into ChatGPT, and then I'm also going to give my professional opinion of each as we go along with these questions. So imagine you want a tree house, and let's say you want to buy your dream tree house, but you don't have enough allowance saved up. So you ask your parents for help. That's where a loan comes in, right? They agree, but they say, if we give you the money now, you'll need to pay us back a little extra each month. That is interest, correct? And that's a way of them saying, thanks for letting us help you, but you also have to pay them extra. So the interest rate is the amount of money that you need to pay on top of your principal loan each month, each year.
Awesome. And so there's so many terms that get thrown around when it comes to mortgage. APR is one of them. So what is that and how is that different from an interest rate?
Yeah, so APR varies differently than a regular interest rate. The main thing to think about here, the interest rate is the price of that treehouse kit that you wanted. So say, for instance, you're buying something that's worth $100. The interest rate is 5%. By the end of the year, you will pay 5%. When looking at the APR, it is not only that price we just discussed, but plus the delivery fee, plus the cost of the paint, really anything else that you needed to pay to make sure that that loan closes.
So the APR is usually more than the interest.
It is always more than the interest rate. And it's why, as real estate professionals, on every document that we send, we need to make sure that there's an APR listed, not just an interest rate, to stay within regulation.
So the APR is what you actually pay and the interest is before that's calculated.
Basically, it's all-encompassing, so all of those fees would have their own if they're looped into the loan. For instance, if you refinanced your home and you wanted to loop in the closing costs, that would be part of your APR because that's not just the interest on the loan amount, but also the closing costs. Does that make sense?
Yeah, it makes sense.
Totally.
So what is better as a buyer, in your opinion? Fixed, adjustable, or variable rates?
It really comes down to the situation. For traditional mortgages, most first-time home buyers, just a set rate is the best. So you want a fixed rate mortgage. Typically, you're looking at a 30-year, 20-year, 15-year, etc. That's the best way to get into a home the first time if you don't really understand the space. So you'll pay the same amount every month. There's no surprises. It is amortized over the loan term, whether it's 30, 20, or 15 years. What I'm seeing in the Oregon market right now is that land prices are going up, but the structure values are going down, and that still allows the county to change your real market value and charge you more in property taxes.
Even though your house value hasn't actually changed.
Correct. It actually went down, but the value of the land is so much more valuable than the structure currently because, as you know, there's a shortage in land.
So you can't make more land.
Exactly. So that's their way around of still making sure that your property taxes increase, but most people don't understand why.
Interesting.
That's very interesting.
And so then how does an adjustable or variable rate work in reality?
So an adjustable rate mortgage, or what most real estate professionals would call an ARM loan, does serve its own purpose. I am not particularly happy about how they are used. It could be predatory if it's not used properly. The best situation to use an ARM is if you're only planning to stay in your home short term, because depending on the loan, how it was set up by the loan officer or the brokerage company, whoever you go through, they can change the terms really at any time when it comes to the interest rate.
Oh, really?
And you typically know, there's like a ticking time clock in the background, right? And eventually either it could go up, it could go down. It depends on what the market sentiment is, what the investors are setting the interest rates at. So it's typically a lower interest rate with those programs, knowing that they're going to hike it up within a few years. But if you just need to have a home and a loan for 2 to 3 years, the ARM was actually your best choice.
So when the rate does it change just once, or does it go with the market?
It depends. There's usually schedules to it. Like after year 1 or after year 2, it's going to change to X amount or whatever the market is deciding it is right now. So that's where a lot of people ran into trouble with the market crash years and years ago, is that they were all in adjustable rate mortgages. Well, when things hit the fan, what happens? Rates go up. All of a sudden, people are, paying $300, $400, $500 more per month because their interest rate adjusted on them, and they lost their house ultimately.
Wow.
And so those are tied to whatever the federal rates are, or is it just what they decided?
So that's another misconception, I think, for a lot of people in the real estate space. It's separate from the Fed. So we just had our meeting yesterday. They dropped 0.25 basis points, correct? Mm-hmm. Yep. And so a tip from me as a real estate professional, the interest rates move 2 weeks before. So they've already priced in. They already knew,
How did they know?
They all know. They know before us. There's a reason why big businesses make the amount of money that they do. They're all in, they just know. They know. And so the investors who set the rates, because we as the lender do not set rates. It's set by investors, and they just know how to hedge their bets. And so about 2 weeks before is typically the best time. The phone doesn't start ringing until about a week after the Fed lowers the rates. Mm-hmm. Or you have some consumers who are really locked in on that fact and know. And I've been sharing that with the buyers that come to Central Willamette, a lot of tips and tricks that most lenders would never give out.
So if the Fed raises rates, could you assume that mortgage rates will also go up, or is it separate than that?
They're separate. So they don't 100% correlate, but they do follow each other pretty consistently. More so on the upside than the downside, because lenders want their money. There's more risk involved, costs more money to borrow from the Fed, so on and so forth.
So the last thing we want to talk about is a variable. How is that different from an adjustable?
So a lot of time people get the two mixed up. For us as real estate professionals, when we hear variable rate mortgage, we're thinking about a home equity line of credit, or a HELOC, as most would say.
So follow up on that. When someone says they're taking out a second mortgage, does that usually mean they're taking out a HELOC or a HELoan?
That is exactly what it means.
Interesting.
Good job.
Thanks. I know some things, but not everything.
A second mortgage, more times than not, will be a HELOC. But there's also things, if you finance your solar panels, for instance. Usually that comes by way of a UCC filing by that company. It's still a lien on your property. So if you try to sell your property, they're going to get their money out of your sale. That's why title companies exist.
That's so interesting. So if someone sold their house with solar panels, can that loan be transferred to the next person, or is it always paid off when the home sells?
It depends. Sometimes when we're working on HELOCs that have those, we'll ask them to subordinate. So they'll move from the second position to the third position.
They probably don't like doing that.
Some do, some don't. They understand they're going to get their money at the end of the day. And as long as the consumer or the buyer has good payment history, why not? Why not do them a service that'll keep them coming back if they ever need solar panels again, or to refer people out?
Interesting. So these are all things that, let's say you're in the market and you're shopping around, your realtor should be aware of these things and should be able to advise you if any of these things are issues or concerns or questions that you have about title or liens or any of that stuff?
I feel like the good ones do know the answers to that, but it's on us as the lenders to facilitate that knowledge. That's our job. The realtor's job is to go find me a home that I can put a loan on. If we're just being completely honest. We're all really good at one thing. For me, it's talking to people and figuring out their needs, making sure that we're actually providing the service that they're looking for. Mm-hmm. And the realtor's job is to make the buyer happy and find their dream home.
Got it.
One last thing I wanted to ask. So with rates dropping, How can buyers navigate this? Like, is it now the best time to go buy, or should they wait 6-7 months before trying?
Yeah, that's a great question. And again, some information that most lenders wouldn't provide for you. Now is the best time for most people to make an adjustment, whether it's refinancing, debt consolidation, all of that while the rates are low. We don't know what's going to come next year. And like I said previously, we don't set the interest rates in the market. That's set by investors. So it doesn't matter what we think at the end of the day. We can use our best judgment and try to push buyers to do what's best for them financially. But at the end of the day, no one really knows what's happening with them. So the most important thing to do is find the number that works for you. So if that is 5% that you're looking for, when you get that rate, you better lock it in and stop looking at it.
What happens if a buyer locks in their rate and then it drops? Can they switch when they're under contract?
It's kind of a gray area. Some brokers can make that happen. Most lenders, what happens is, say you lock for 30 days, you have to wait for that lock to expire. The one way you can edit it, and this is very high level overview for a lot of people, there's an entire rate matrix that dictates based on how long you want to lock the loan, how much it's going to cost you for that fee. That's a closing cost in itself. That doesn't include your normal closing costs, it's something extra. So when lenders are telling you, oh, I can get you 5%, they're not telling you that it costs 2 discount points or $9,000 to get there. Does that make sense?
It does. So on the topic of that, some lenders will say, oh, I can get you a no closing cost refinance. Is that a real thing that they can offer that?
Kind of. I mean, some major lenders are using that as leverage right now to get people in the door. Smart, right? It's a very strong business move to do right now when not a lot of homes are selling. That kind of tactic doesn't work when the market's busy because people go where they want to go. Right now, people are looking for the most value, whether it's the person that can get the value or the actual lender itself that can get the value for you.
So when a home buyer is interested, is part of your job to find the best product with the best rate and the best overall monthly payment, and go over all the options with the home buyer? Do you tell them what the options are and the different rates? Because I know FHA might have a different rate from VA, that kind of thing. How in depth do you go with whoever's doing the buying?
I really like to just start with a conversation with any buyer. What are your goals? How much house are you looking for? Do you need acreage? What is your ultimate goal? That's what the conversation should start with, and what a lot of lenders won't do nowadays. Mm-hmm. It's all about what can they do for you and not what I can do for them. So I'm the exact opposite. At the end of the day, if somebody can find a better rate somewhere else, then by all means, please go there. But send me your fee sheet. I will show you where they might be overcharging you. Origination is the biggest fee that a lot of lenders charge, and people don't understand what that means. So, for example, somebody can charge 1% origination fee on $300,000. How much is that? Quick math.
$3,000?
$3,000. Central Willamette only charges a $7.99 processing fee and an $8.99 administration fee. That's it. We cover any of that our partners would need. We don't put that cost onto the consumer. So it's really important when you're working with lenders, shopping around, that you understand the fees that they're actually charging you and the why. Because remember I mentioned that 5%? Well, that's what they're going to lead with, right? This pretty number. And then you look at the closing costs and you're like, wow, another $9,000 on top of the already $6,000 to $8,000 on top of a realtor fee. And actually that brings me back. You were mentioning the zero closing costs. So circle back to that when it comes to working with your realtor. Another tip for you: when looking for a realtor, do not rush into it. Do not sign any contracts. Make sure that you actually like this person before, because it can get kind of hard to step away once you start having those conversations. They've shown you some homes. So you need to do research. More times than not, your lender already has people that they think would vibe with you and actually benefit you in this transaction. You'll have a better home buying experience. And I have, one that just happened like that, where I had to tell the buyer, this is not a good situation. There's too many repairs on it. I don't like how this realtor is speaking to either of us. I've got a realtor for you who will get along with you, and it's just going to be a better experience, And that's something that I like to do, connect people, right? Because you can get the same home buying experience anywhere else, but it's the person, the people, your lender and your realtor, ultimately, that will have your back more than anybody else.
You mentioned contracts. When I bought my home in 2023, there were no contracts required with the realtors. Have they added the requirement for that?
It's still not necessarily required. It's something that realtors do to protect their time. They don't want to show 15 houses to somebody who's not realistically looking to buy. So it's their way of kind of like keeping them on the hook, so that they still get paid at the end of the day. Because most realtors are not making an hourly wage, So each sale is very important to their bottom line.
So shopping around for realtors is always recommended.
I would say 2 to 3, unless the first person that you talk to is the greatest thing happens, right? Sometimes you just really get along with somebody, it works for you, and they understand you. So, and if it's not that feeling, then find somebody else, because that realtor is your best friend when it comes to negotiating your contract. Right now, I would personally consider it, I'm not a market expert by any means, but I would consider it still to be a buyer's market, which means that sellers don't have very much negotiating power. So what we're seeing is, while the realtor's overall fee is lower, around 2.5% standard across the board for both the selling and the buying, I'm seeing that fee be covered, by the seller, and then also, up to 3% of closing on there as well.
Because they want to sell their houses.
They want to get out of it before all this stuff happens. The rates tanked. Everybody that was on the outside this entire time are going to be jumping on whatever rate that is, and it's going to create a bidding war just like during COVID.
And then people selling their houses are going to pay more for their next house.
Exactly. So while they'll get, the bid up on their current home, they're still trying to negotiate with ABC over here, and investors jumping into the markets offering cash. You can't beat that.
You can't avoid that either. It just happens.
It happens, yeah. So now, if for you think that you are ready to buy, then give us a call at Central Willamette. Myself or Sue would be happy to assist you, even if it's just a conversation. If you just want to know where you're at, where rates are at, just give us a call.
The first step is to call, right?
That's all it takes. Open that line of communication, and you'd be surprised what you find.
Yeah, I do think that a lot of people are afraid to call until they know that they're ready and they're really interested. But I think it's important to remind people that you guys are not just business. Give me your account information, give me your pay stubs, and let's go through it. You are educators. You are there to facilitate conversations with realtors. You are there to help our members in any way that you can to get to the point where they're buying a home.
Yeah, we try to explain that we're not the boogeymen,
Yeah.
Our job is to get people into homes. We've had a few inquiries about like foreclosures and stuff. I don't deal in that space. That's taking people out of homes. I get people in homes, right? So if you're on the fence or you're just scared of, that you're not ready, just make that phone call. Like Kaitlin said, that's the first step. That's all it takes.
Well, thank you so much for joining us today, Alex. I learned a lot. I'm sure you did too, Michelle.
Totally.
Well, thank you for listening. Find us on Instagram and Facebook at Central WCU. Check out our podcast website page. You can send in any suggestions you have for episodes or any feedback. And just join us next time so we can keep building better lives together. Thank you.
The information provided here is for informational purposes only and does not constitute financial advice. Consult with a qualified financial advisor before making any financial decisions.